Well, the year 2015 has been one of those years. There are always movements in the markets, very interesting ones, and the reasons for them in the local and international markets this year. The much anticipated Fed rate decision kept emerging market currencies on their toes. And of course, who can forget the great fall of China? Or was it? And Greece, of course. Remember Greece dominating the wires in the early months of the year with its back and forth bailout negotiations and what the world thought would result in a GREXIT, the exit of Greece from the European Union. That's all gone very quiet. Well, today we're going to look at some of the bigger stories of the year and how they affected emerging and frontier markets. And we're doing that with Dino Voulakis, who's portfolio manager at Nedbank Private Wealth in South Africa. He's talking to us from Cape Town. Duncan Lumwamu, who is senior investment analyst at Saiton Investments from Nairobi. And Pabina Yinkere, head of research at Vivita in Lagos. Well, let's start off the discussion, ladies and gentlemen, with the United States, of course, where the Fed increased rates for the first time in nearly a decade. Those rates had been stuck for all that time. There are people who've been in the markets for years who don't know what it's like to have higher interest rates than they've been. Well, let's start then with in South Africa, seeing that we're here at the moment, and with Dino Voulakis in Cape Town. And I mean, it was signaled for so long, Dino, that interest rate increase. By the time it happened, the markets really weren't surprised, and the overall response initially was very positive. It seemed to be saying, well, this means the US economy is getting stronger, and that's good for everyone.
Indeed, yes, David. Very well and clearly discounted in markets. I think what the confidence that markets took from the content of the message was not only that it was a unanimous decision, but that the forward landscape with regards to this normalization has been well sketched and the parameters clearly given. So looking at inflation to reach that 2% upper parameter during the course of the next 12 to 18 months, that will be the primary indicator to watch. And that there is, on the back of that, significant confidence with regards to employment in the US, or rather that the unemployment rate falls, expected to fall to about 4.7%, their GDP growth to come in at 2.4%, with some expectation that you'd probably see another 25 basis point increases in rates in that move up to normal, which would put it at about 1.45.
Yeah, thanks, Dino. Let's go across to East Africa, where Bonnie's guest, Duncan. Duncan, from the East African perspective, your markets pricing this in as well?
Yeah, for the news which have come in about the Fed, the East African markets are currently slowly reacting to it. We haven't really seen much of an impact as most of the market analysts had expected initially, where there were expectations of huge capital outflows. Now, however, that has not been. It could be informed by the fact that the news had already been priced into the market already. So investors were already aware of the possibility of the rate hike, which had already been affirmed. So the markets have remained fairly stable. We've seen quite a high foreign investor activity within the equities market in Kenya, which we are continuing to see even today. And basically, is that a portfolio rebalancing within the foreign investor portfolios. However, in terms of seeing very huge capital outflows, we haven't yet seen them as it was expected.
Okay, and let's get the West African perspective from Pabina, who is there with Esther in Lagos. Of course, the Nigerian economy has really been hit by that oil price slump. A year ago, we were taking for granted oil prices of above $100, and it's gone down. I see the latest number I saw was $37.10. This was unimaginable a year ago. So the Nigerian economy in the context of this rate hike in the US.
Okay. Yes, well, as you would notice, the Nigerian financial markets had since priced in interest rates hike in Nigeria. And since the taper tantrum of 2014, we've seen significant outflows from Nigeria's financial markets. And not to forget that the continued slump in oil price and then domestic issues such as our elections and pretty what I would term a drag in the transition from one government to another were issues that further compounded some of the problems coming into Nigeria. So the U.S. Fed hike had pretty much been priced in a long time ago.
Okay, Pamina, let me just ask you this. Now, do you think that before I go into how it affects Nigeria directly, do you think that there was a lot of focus on how the Fed rate hike in the first place and little attention to the fact that it was going to actually be a very gradual rate hike? If you think about it, it was very marginal, especially if you also put into context the fact that the U.S. Fed chief did say that it's actually going to be gradual going forward. So did we put so much hype around the fact that there was going to be a rate hike and little attention to the fact that it was actually going to be very little hike?
Like I mentioned before, I think the market had pretty much priced in the U.S. Fed hike a long time ago, because when you look at the situation, really, beyond what is happening globally, we've also had our own domestic issues, which has really led to a lot of capital outflow from the Nigerian market. Yes, interest rate normalization in the U.S., interestingly, is coinciding with a time where Nigeria is beginning to go into an easing of monetary policy, because if you look at it, Nigeria's growth has been struggling since the oil price decline, and when you think through it, it is necessary that we begin cutting interest rates at this time to boost our own growth. Because I said earlier, the financial markets had pretty much priced in the U.S. Fed rate hike before now. I don't think it's going to have any impact in our market, really.
Okay.
Still on that conversation, and especially Duncan, we get a sense that we overplayed this whole Fed hike situation, because evidently, if you look at the exposure for East African markets, it's not as pronounced as, say, South Africa or even Ghana or Mozambique, or that are majorly commodity prices. My concern would be, going forward, what sort of measures or contingency plans can Kenyan investors place in the wake of such news?
Well, yeah, it's true. The news came in which looked a bit extremely extrapolated from what the real situation is.
Right.
But to be fair to the Kenyan investors, look at it at the time it came in through. It came in through at the time when the Kenya shilling, most of the East African currency had really depreciated against the major currencies, particularly the dollar. So everyone was looking at this additional impact in case of any rate hike from the US would actually melt away what they have achieved for the last 2-3 years.
Right.
So it was a necessary concern that every investor would have. But as we say, that anticipation had already priced it in a lot. So as much as it comes in now, it already had been priced in.
Right.
And it's good that from an investor perspective, that it was a bit delayed.
Right.
It didn't come in the last few months we had expected. It came in at a time.
So the markets expected it?
Yeah, exactly.
All right. Interesting.
And Dino, just one more comment from you on this interest rate issue. Of course, the effect on South Africa, we've had a turbulent time in the last week. The rand, of course, was moving in that range between 14.20 and 14.40. And basically, it's got a rand weaker against the dollar since that political crisis of last week in the markets. So where is our currency and our interest rates? Where are they going to go after the Fed?
Indeed, we've lost 32% to yesterday, to date. Before the political crisis, it was about 24 to 26% loss. So it's felt that the challenges were discounted into the exchange rate. That being that our growth rate has really been ratcheted down and is not close to the 2.4% that the US is forecast to grow at. So if we're fortunate to bring in a GDP growth rate of 1.4%, we'd be under par, and therefore our currency exchange rate would be under pressure, and the required rates of return out of our capital markets would need to be higher to attract capital into the South African proposition. And that indeed is a challenge for most all the emerging markets out there, is how to lift over the next 12, 18, 24 months, how to lift their GDP growth to match that of the US, or indeed exceed it, and in so doing allow for their currency exchange rates to propositions to improve. So it is a challenge, very difficult when you're experiencing a commodity squeeze, as certainly most African countries, including South Africa, as well as countries in Southeast Asia, Australasia, are commodity or have become, over the past decade, commodity dependent. That commodity dependence needs to be...
All right. Dino, we'll have to cut it there, that discussion on the Fed rate. We'll come back to currencies, though, in a moment. We're going to unpack the downgrading of Nigeria and Kenya's currency after the break, so don't go away.
Welcome back. You're still on the Open Exchange Joint Conversations East, West and South. Let's take a look now and focus a little bit on the currency situation, especially in the West and Eastern African spaces. And African currencies have suffered losses against the dollar with the Kenyan shilling and the Nigerian naira facing significant depreciation for better part of the year. Analysts have also attributed the weakening to overvaluation of both currencies in these two markets. For the Kenyan shilling, for example, has, however, been seen gaining some stability and is expected to trade at a tight range as the year ends. The naira is focused to weaken as focused exchange reserves dwindle following the Fed rate hike by 25 basis points. Well, still with me in this discussion is Duncan Lumomo of Certain Investments, and of course Esther is seated with Pabina Yinkere, Head of Research at Vetiva. Let me start off with Duncan. Looking at the performance of the Kenyan shilling for the past 12 months, while regional and sub-Saharan currencies have been depreciating, you may say it hasn't been that bad. I mean, if you compare with other currencies, Kwacha, for example.
Yeah, sure. Within the East African region, really, the currencies, yes, have depreciated, but comparative to how the other markets have performed within sub-Saharan Africa, we've quite held off and had a very supportive environment. Well, one of the key advantages within the East African market, we are not really commodity dependent. Yeah, we've seen a lot of infrastructure coming in, a lot of also inter-regional trade coming in also. So all of this, as much as the currency is depreciating, is coming in to help. We see a country like Kenya here, there's also been quite a number of dollar inflows from especially the debt, the foreign debt we've been taking, and also some bit of recovery from some of the sectors like tourism, which haven't really fully recovered. So we might have to look at it from a specific point by point, where we see generally the currency is taking a beating, but we have several structural advantages against most of the other countries in the African region.
Esther, let's just get a West African perspective, because in the East it has been largely driven by current account deficit that has been pushing and giving lots of pressure to the currency. What has been the situation like for the naira?
Well, Bonnie, it's been same here. The naira has taken a severe beating, but we've seen the Central Bank of Nigeria take a number of actions to help stem the slide in the naira. We've seen it move aggressively to protect the naira, but interestingly, it's been met with more criticisms than praises. But the Central Bank has said that it will do what it has to do to protect the naira. We've seen restrictions. We're hearing manufacturers complaining. Just yesterday, the Central Bank sent out a circular to commercial banks asking them to restrict the amount their customers spend on their debit cards outside of the country. And of course, you know that all of this is stemming from the fact that we're seeing lower revenues coming in from what Nigeria makes from its crude oil sales. So it's been a number of issues still impacting on the naira here.
And so let me just bring in Duncan to this conversation. Duncan, we've been talking about this current account situation. In Nigeria, there's a whole conversation about devaluation of the currency. How far are we from an East African perspective to even start conversation about devaluing the Kenyan shilling?
Well, for us, really, we have to really sort out the current account challenges, which cuts across all the East African countries. If you look at Kenya, Uganda, Tanzania, even Rwanda itself, we still have a huge current account challenge. However, the steps which are being taken in to try and solve this, in trying to also encourage a lot of production within local economies and trying to boost exports, which is also coming in to appreciate to help in closing out this deficit. But also the challenge of having an expanding import bill is one of the biggest challenges that all African countries, particularly the East African community side, will have to address, which is a factor cutting across all the global markets.
Okay, let me come to you, Pabina. As I said earlier, we've seen a lot of pressure under the Naira, and I've talked about the fact that the reactions to the central bank's policies to help protect the Naira and at the same time curb the forex reserves have been met with more criticisms than praises. But what is your take from January up until now, the way the central bank has moved to protect the Naira and the forex reserves?
Yes, there's been a lot of criticism. But I think what people fail to realize is look at it from the central bank's position. We've had 2 rounds of devaluation coming into the first few months of this year, which already, in some instances, if you look at it, we're coming from 155 up until about 199 thereabouts. So that is quite significant, almost a 26% adjustment in the currency. Asking the central bank to take another adjustment in such a short time might be very, very challenging because you're probably looking at the inflationary effects. But for us and for me, when I look at the situation, really, I ask myself the question, would an adjustment really solve Nigeria's currency problems? I don't think it would. There's a fundamental problem. The oil price is low. The inflows are not as they used to be, even if you take another round of devaluation. Now, Nigeria is an import-dependent country. There will still be demand for the dollar. So what you want to keep devaluing the Naira every year. So that is why the CBN is trying to, as much as it can, put some controls around the currency and hope that as we move forward, things would improve and allow it to free up.
Yeah, tough, very tough forward. Choices indeed. They have their work cut out for them. Bunny?
Very well, Esther. Let's shift focus a little bit and talk about the ongoing conversations that are happening in Nairobi, and has been dubbed some of the biggest and most important talking shop this year, and that is the World Trade Organization that is having its 10th ministerial conference in Nairobi that has seen success with the ratification of information technology agreement, as well as the tabling of negotiations and documents on agriculture discussions that have riddled by what developed nations have called imbalance trade-offs. And that is a concern that we've been having, that there's a lot that should have been built on the Doha discussion that simply hasn't happened. We seem to be having a fallout. Duncan, will we ever get to a point where developed and undeveloped countries feel like they have equal voice at the table?
Yeah, we are going there.
Right.
We are really on the path towards achieving that. Mm-hmm. But the key question is, after all of the conventions, like what we saw in Doha and now what we're seeing in Nairobi, are we able to see now actionable recommendations coming out of it? And actually, these respective partners actually now actioning them.
Right.
We've seen a lot of support now coming in, as you've highlighted, on ICT. We've also seen a lot of, from agri-business perspective, where subsidies are coming in, which are all aimed at trying to improve trade within African countries and within even other countries away from the African continent. So a lot of this cohesion needs to come in, and a lot of real solutions that impact, that are actually actionable at the ground level, because remember, every nation is trying to pull towards its side. So a lot of that needs to continue taking place, and also cognizant of the fact that each of the economies is having its own challenges. African economies are quite lagging behind in terms of agricultural output,
right,
and a lot of infrastructural spending to try and boost the same, a lot of development going across, governments spending a lot of money trying to spice up the economy. So all of this is going to at least position African countries really attractive and a much stronger position at the WTO table whenever negotiations are coming. Because what we are seeing mostly also coming in is a lot of it is also favoring the African countries, but we don't want that to be the situation going forward. We want now African countries to come in and
they
have
need to
a
trade,
voice.
they don't need to beg.
Exactly. They need now to come to the table and say, this is our position in trade. Let's now offer these negotiations. Let's actually lead the negotiations.
David?
Yeah, maybe you can pick it up in Nairobi, but I'd first like to put the question to Pabina. I mean, there are lots of encouraging things happening, but again, going back to our discussion about the markets and the shock that we've had in the last year with commodities, China growth is not what it was. Africa is indebted to China, many countries. Infrastructure in Africa needs a lot of work. And the present economic climate, one just senses the gap between the developed and underdeveloped economies widening, Pabina.
Yes, if you recall, many African countries are commodity-led economies, and China is a big part in the commodity demand globally. So if you find China's growth cooling down, it's definitely going to have repercussions on commodity export countries like many of Africa's countries. So you're likely to see trade between China and basically the rest of the world and against developing countries such as we have in sub-Saharan Africa dwindle going into 2016.
Okay, let's shift our focus now. We're looking at MTN, and Nigeria's telecommunications regulator, the NCC, imposed a 5.2 billion fine on South Africa's MTN group for failing to disconnect unregistered lines. Now, this led to the resignation of the company's chief executive officer, Sifiso Debengwa, and the appointment of non-executive chairman Futuma Leko as executive chairman for a maximum period of 6 months. Now, MTN Group has filed a suit in an interesting twist at the Federal High Court in Lagos yesterday to challenge the Commission's decision to impose a fine on the network. Pabina, let me come to you. Let me start with you here since you're in the studio with me. This is an interesting twist. First, all we've heard in the media was how MTN has been in negotiations with the Nigerian government. And interestingly, it says that it's still in negotiations with the federal government. But on the other hand, it says it has now gone to court. Let me quote, I'll take a quote from the company yesterday. It says that there are now valid grounds upon which to challenge the fine. And it says it has followed due process and instructed its lawyers to proceed with an action at the High Court to seek appropriate reliefs. What do you make of this?
When you look at it, yes, negotiations have been going, but when you look at the Nigerian government's position, it's not willing to really bulk on the amount it has said. Yes, it has been reduced from $5.2 billion downwards, but it's still a significant chunk. I mean, if you look at the number, it still almost accounts for almost all of MTN Nigeria's revenue. So it's still a very, very big fine to think about. But what I think has happened is the lawyers of MTN has really looked at the situation and have probably found loopholes with which they can, make a case here. So that is why we're seeing this suit come to play here.
An interesting one indeed. David?
Yeah, it's been a fascinating story, hasn't it, Esther? I mean, this big company, which all the countries I've been to in Africa, MTN certainly has such a presence, and yet they really have stumbled on this one. And as Pabina says, the fine will still be a huge amount of money for MTN, a crippling amount of money. So I want to just go down to Cape Town, to Dino Velakis again, to talk about the investment angle, Dino. I mean, we've watched this MTN story for over a month now. It was an astonishing story. And as the story went on, at first it seemed the Nigerian regulators might have been being unreasonable. In fact, the longer the story went, it looked as if MTN really had been negligent. So there's still questions about the governance, and there are questions about this legal case. Now, maybe it's a question of delay, but how should investors be thinking about this? There's so much uncertainty, isn't there?
Well, certainly an interesting mix of managerial failure, governance failure, as well as now the supposed challenging aspects to the regulators' imposition of this fine. It would be crippling for MTN, and it comes at a very difficult time. MTN faces many challenges, not only as a result of this fine in Nigeria, but the fact that there's downward pressure on voice. The new emerging dynamics within the telecom space is data, and more than that, content on data. And MTN has seemingly lost its leadership hold in the mobile telecommunication space because they have not jumped on these new frontiers. So it's a challenge to MTN to not only deal with this massive fine and the implications thereof, but also to reposition the rest of their businesses across the continent and try and get growth going. If one looks at the share price, 93% off its all-time high of 263.44, 60% of that value was lost this year. So yeah, I mean, it's at some point the company must reflect value. Typically, and if one considers the metrics at hand, it would appear to offer value, but one should proceed cautiously. This legal challenge has bought time. They needn't then, it is felt, oblige the authority and pay the fine by the 31st of December.
Thanks for that assessment there from the investment angle. Still a lot of uncertainty and no holidays there, one would think, for MTN executives. After the break, we're going to look at the impacts of student protests in South Africa and ask for the thoughts from Kenya and Nigeria.